Okay, I think we can get started now. So again, a warm welcome to everyone. Good morning and good afternoon. Welcome to the A2ii-IAIS Public Dialogue launch event for the new A2i paper, which is on assessing the impact of inclusive insurance regulations in Brazil. My name is Rochelle Jung, and I'm an advisor here at the Access to Insurance Initiative and the lead on communications. It's a pleasure to be here with you all today. For those of you joining us for the first time, these dialogues focus on current and relevant topics for insurance supervisors and provide a platform for peer exchange. And we're very pleased that this dialogue is a public one that's open to all stakeholders. Today, we're officially launching the paper, explaining the methodology behind the impact assessment and sharing some of its insights and results, including some challenges that we faced during the study. We believe that the study can provide a framework for supervisors who want to assess the impact of their regulatory frameworks in the future. Before I begin, I would like to introduce a few housekeeping rules. Please be aware that this is being recorded, and for sound quality, everyone should stay muted during the call. For questions, you can use the chat box on the right-hand side. We will address the questions during the Q&A section at the end of the dialogue. If you want to unmute during the Q&A, please raise the virtual hand so that we know you would like to talk. And if you would like to listen to this event in Spanish, please click on the three dots at the upper part of your screen and select the language that you would like to listen to. We're very happy to provide a translation into Spanish for today's dialogue. Without further ado, I would like to introduce the A2i's new Executive Director, Matthias Range, for his welcoming remarks. Welcome, Matthias.
Yeah, thank you so much, and good morning and good afternoon, everyone. Welcome to our public dialogue. As you just heard, my name is Matthias Range, and since January, I'm the new Executive Director of the A2ii, and I'm quite excited to be here today at my first A2ii-IAIS dialogue and also see a few familiar faces. Your interest to deep dive in our regulative impact assessment of the regulative framework of Brazil is a testament to the growing recognition of the importance of inclusive insurance in promoting financial inclusion and economic development. As you know, inclusive insurance plays a vital role in protecting low-income individuals and families from financial shocks and providing risk transfer options for residual risk where no solution is offered yet. By making insurance accessible and affordable, we can empower people to manage risk and participate more fully in the economic and also build resilience across different sectors. And inclusive insurance regulations have grown a lot in the last years. And as you see on that slide here, only in 2009, only 6 countries have developed an inclusive insurance framework back then. And these were our pioneers. And today, we know of at least 40 inclusive insurance regulations which exist. But how does this regulation affect the market development? Theoretically, this is all clear, and in general, there's no doubt that enabling framework is what it is, enabling. But do we know which part of the regulation is more effective than the other? Which measure has which impact? Where to start and what comes next? And that's why it is so important to conduct studies like this to understand the impact of regulation. In order to strengthen A2i support to you, but also for you to decide where support is needed, it is crucial to gather learnings from countries that went down that way already, have initiated a framework and made these learnings. But I do not want to anticipate the presentation, so I better stop here, and I wish you an inspiring insight how the introduction of Brazil's microinsurance regulation framework back then in 2011-2012 spurred the market. I hope the dialogue will be informative and inspire others to use this framework in the future to assess the impact of the regulative frameworks. And I do encourage you to actively participate in the Q&A later after that presentation and download, of course, the full publication on our website. Your question insights are very valuable, as you can imagine, to our discussion and to further develop this assessment framework. Thank you once again for joining us today, and now I'm have the pleasure to hand it back to the moderator. Thank you so much.
Thank you very much, Matthias, for these welcoming remarks, and we're happy to be able to introduce you as a new executive director on our first public dialogue of the year. Next, it's my pleasure to welcome Connor Donaldson, who is Head of Implementation and Assessment at the IAS, for some welcoming words. The IAS is our partner in producing these dialogues. Welcome, Connor.
Thank you very much. And just to make sure you can hear me okay. Perfect. So it is a great pleasure of mine to join this call and to participate in this discussion. Financial inclusion for the IIS has been of critical importance since we adopted our inclusion agenda, our access agenda back in 2008. As a standard-setting body, we were pioneers in terms of recognizing the importance of financial inclusion and recognizing the critical role that insurance can play in fostering a more resilient economic and social landscape in countries. We've been very fortunate to be able to work closely with the Access to Insurance Initiative to be able to advance this access agenda and to collaborate on a number of initiatives, these dialogue events being an important part of our collaboration, and particularly being able to reach a wide number of supervisors. Well, Brazil has been a true pioneer in a number of aspects related to inclusive insurance. And we've seen over the years a lot of efforts underway within Brazil to be able to advance a more inclusive insurance market. I look forward to hearing the presentation today, and I think that all of us hopefully will come away with a few learnings that we'll be able to take back and really think through the relevance for our respective jurisdictions as well. I think it's also important that we recognize that the IIS has really come to appreciate the importance of inclusive insurance, not only insofar as bringing insurance to traditionally poor and underserved segments of the population, but we've really seen a growth mindset insofar as jurisdictions recognizing that inclusive insurance is actually a challenge no matter where you are in the world. Even the most advanced and sophisticated insurance markets face inclusion challenges. There are underserved segments within their population. And I think that in a number of ways, emerging and developing economies have really been at the forefront in understanding steps that supervisors and policymakers can take to be able to build and enable greater insurance penetration and greater access to insurance. So I do think that not only do these dialogues serve as a great opportunity for peer learning amongst those jurisdictions, particularly those ones in emerging markets where insurance market development is still at early stages, I do think that also we benefit from these dialogues for being able to extract learnings from emerging markets that are really facing these issues on a day-to-day basis and be able to share them more broadly across the IIS's global membership. So I do think, from my perspective, these dialogue events are really relevant for all insurance supervisors, and I really do look forward to hearing today's discussion. And I want to thank the A2ii for their efforts in pulling this together, and really look forward to being able to see and hear the discussion today. So thank you very much, Rochelle.
Thank you, Connor. Now it's my pleasure to welcome two more guests. We have Luciana Dalangol from CNseg and Jessica Bastos from SUSEP, two organizations that have given key support in the achievement of this assessment. First, I would like to invite Luciana, who is Superintendent of Consumer Relations and Sustainability at CNseg, which is the National Confederation of Insurers in Brazil, to give a few words. Luciana, the floor is yours.
Thank you very much. Good morning from Brazil. CNseg, the Brazilian Insurance Confederation, is the institutional representative of the insurance sector in Brazil. The inclusive insurance agenda is strategic for us. Among the Confederation's action in recent years, we can highlight the support for the Access to Impact Insurance study on the effect of inclusive insurance standards published in the last decade in Brazil. Studies like these, combined with data collection from the sector, play a crucial role in Brazilian regulatory development. The data provides valuable insights into product access patterns, claims, policyholder behavior, and other risk factors. The study demonstrated regulatory advances in Brazil, especially for the microinsurance sector, providing valuable insights that meet the importance of the agenda for us, especially for the development of products, policies, and strategies that promote financial inclusion and the protection of low-income consumers. Additionally, regulators can make more effective decisions, contributing to a more resilient and sustainable microinsurance sector. To this end, CNseg will always be attentive to participating and promoting initiatives such as the study assessing the impact of inclusive insurance regulations in Brazil, carefully and brilliantly conducted by the great specialist on this subject, Regina Simões. Thank you very much for the floor. Thank you for the audience, everyone, and have a great event today.
Thank you very much, Luciana, and the A2ii is very grateful for CNseg's key support in this assessment. Next, I would like to give the floor to Jessica Bastos, who is a director at SUSEP, the Brazilian Insurance Authority.
Thank you very much. So good morning, everyone, or good afternoon. So we at SUSEP are very excited about the release of this study that analyzed the impact of regulation for inclusive insurance in Brazil. We know that promoting regulation that effectively develops the economy requires data, diagnosis, and rationality. And studies like this show us whether or not we are on the right track. The study reflects the effort that the Brazilian state has made to expand the portion of the population that has access to insurance, to financially include these people and thus ensure a more resilient society. So the studies show us what has been done so far. SUSEP continues with this objective, especially through two main initiatives. The first one is the strengthening of the regulatory sandbox, which has proven very effective for creating new companies and launching new products, especially for microinsurance and inclusive insurance. And the idea for the future of the sandbox is to be able to count on state investment through development agencies for the new companies. The second initiative is indicated in SUSEP's regulatory plan, which is the elaboration of a proposal for a national access to insurance policy, with alternatives to increase the population's access to insurance and pension products. We hope to be able to count on access to insurance to continue its studies on Brazil, on Brazilian initiatives, and thus show us if we are still on the right path. Thank you very much.
Thank you very much, Jessica, and we're very grateful for SUSEP's support in this study. Now I would like to move on to the presentations about the paper, the reason why we're all here today. Initially, we will have Huilin Chu, A2ii consultant, who will provide us with an explanation of the methodology behind the impact assessment. After that, Regina Simões, who is regional coordinator for Latin America and the author of the study, will provide us with some of the main insights and results from the regulatory impact assessment. At the end of both of the presentations, we will have room for questions. Questions can be written into the chat at any time, and then we will address them at the end. So now it's my pleasure to hand it over to Huilin, who has been working very closely with A2ii since 2016. Her work has included supporting previous impact assessments on Ghana, Mongolia, the Philippines, and Peru, as well as this impact assessment on Brazil. She started her career at Bank Negara, Malaysia in 2011, where she designed the National Inclusive Insurance Regulatory Framework, which brought insurance to over 1 million people. Aside from A2ii and regulatory work, Huilin also drives projects in the tech and climate risk insurance space, including a UN World Food Programme pilot. So it's my pleasure to now hand the floor over to Huilin for the presentation on the methodology.
Thanks very much, Rochelle. I hope you can hear me well and see my slides.
We can hear you. I think slides are loading.
Okay. Maybe just give it a few seconds.
Yes, we can see.
Perfect. So thanks again very much for Rochelle for the kind introduction, and I'm really very happy to be here. I'd like to start by talking about why we conducted this assessment in the first place. Now, you know, a regulatory impact assessment may be conducted for different reasons. For example, to guide decision making, or as an independent review for accountability purposes, like to the public, to donors, or to the government, for example. A2ii has conducted a number of impact assessments over the years using different approaches, and this includes countries like the Philippines, Peru, Mongolia, Ghana, and now Brazil. Now, inclusive insurance regulations have been in place for a very long time. As Matthias pointed out in the beginning, it's great progress. It's now in 40 countries, and development is ongoing in 16. But supervisors need a practical way of checking whether they are on the right track, as Jessica pointed out. And this needs to be done in a way that recognizes that supervisors themselves are not academic researchers. So in this case, the way we approached it, the Brazil assessment was developed specifically thinking about how to design an approach that the supervisor can use themselves as a toolkit to check whether they're on the right track. So what really is a regulatory impact assessment? Now, from a very practical sort of common sense point of view, what the supervisor really wants to know are basically the answers to these 6 questions. What was the goal or the impact you wanted to see? Then what did you do to intervene? What did you expect to happen? And then what actually happened? And then circling back to question 1, so did the intervention achieve the impact you wanted to see? And then finally, what should you keep on doing and what should you do differently? So this kind of sums up the 6 questions that a supervisor would want answered as a key components of their regulatory cycle as they sort of review and enhance their regulations over the years to help them assess the effectiveness of their regulations and where to go from there. So now let's go into our approach to the Brazil assessment. So we started with the research question of what are we setting out to prove, right? Or in other words, as a supervisor, what is the impact that you wanted to see? So we wanted to see whether in Brazil, inclusive insurance regulatory measures, 1, increase the uptake of insurance among low-income and other underserved segments, and 2, ensure that insurance offers value to the same segments. Next, we identified the scope of the assessment. So when we say inclusive insurance regulatory measures, what does that mean? So in this case, it refers to regulatory measures that were used to actively make insurance more inclusive. So this means 1, a dedicated framework for microinsurance or inclusive insurance, which many of you are familiar with, or 2, other discrete measures that reduce costs, allow new business models, or strengthen consumer protection. We intentionally did not include subsidies, taxes, and supply quotas. And you will see when Regina presents that we basically mapped out all the regulations that fall under this scope along a timeline. And then this also helped us to define which period to include in the assessments. Next, another important term to define, which products were within scope. So here we look at products that were intentionally targeted at low-income, excluded, or underserved segments. So this means products that are designed to be simple and affordable. And you will notice that this is aligned with the IAIS definition of inclusive insurance. And the reason we focus on intention is because we're trying to measure the impact of regulatory measures on industry behavior. So that's why it has to be a targeted response to the regulations that were put in place. We also included products that were not classified as microinsurance per regulations, but we excluded compulsory products. Now, what about value? So this is an interesting one because microinsurance value has largely been measured using claims ratios. So high claims ratios mean good value, low claims, less so. But here we also chose to focus on market conduct outcomes. So outcomes in line with Insurance Core Principle 19, which looks at the quality of the product from end to end, from product design to disclosure to sales to servicing to claims. But the challenge here is that most regulators still do not have comprehensive conduct data, such as complaints data or servicing timelines or very detailed claims data. But we think that this is still a very important aspect to include in the framework. Because even if you have to use qualitative data, such as via interviews, it can help a supervisor spot unintended consequences. It can help ensure a more consistent approach between sort of traditional versus inclusive products. And it also shows that if there isn't sufficient conduct data, then it's important for the supervisor to do something about it. Right, so now we have a clear scope of the regulatory measures to include in our assessments. So that's on the left of the slide. And now on the right, we have basically a clear research question, or in other words, the impact that the supervisor wanted to see. And then we filled in the blanks in the middle by mapping out what was expected to happen, meaning the chain of events or the causal pathway showing how one thing is expected to lead to another. So we asked ourselves questions like, okay, who are the stakeholders affected by the measures? Who are the change actors? How were they expected to respond? So what were they expected to concretely do? And we made a point to focus on observable outcomes, to be concrete, and to separate out discrete events as much as possible. I mean, you can also call this a theory of change. So on this slide, you see kind of the full logical framework that we developed for Brazil. So basically, in the first line, regulations lead to new providers who then offer new products, and then that leads to uptake, or is expected to lead to uptake. And in the second line, regulations is expected to lead to new business models, whether by existing or new providers, and then to wider distribution, and then to more uptake. And then the third line, slightly simplified here, but regulations lead to better behaved companies who then offer products that offer value to the low income and underserved segments. So now when you sort of put these three lines together, you kind of have the full picture of what the supervisor expected to happen when they put the interventions in place. So now we need to find out what actually happens. So let's take the first line of the map. So again, regulations lead to outcome 1, new providers, and then outcome 2, products, and then impact take-up. So what we did was to put together a list of indicators, quantitative and qualitative, for each outcome. So basically in each box here in the logical framework, at every level, you have a list of indicators that captures whether or not this event happened. And then we identified where we will obtain this data. So it could be regulatory data, industry data, it could be surveys or extra interviews that we had to do. And then we collected baseline and current data. So basically before and after data. So before the intervention and after the intervention. We had to sometimes settle for proxies when data was not available. But one helpful thing that came out from this was that it highlighted data gaps. So ideally, even if the data you ideally want is not available, supervisors who go through this thought process will be able to identify data gaps and where improvements to their data infrastructure is needed. It's also important to note here that impact is actually kind of up to the supervisor to define, right? So what does success look like to the supervisor, to the party conducting the impact assessment exercise? So if your goal is uptake, then you stop here at the level of measuring uptake. But if your goal is to prove resilience of policyholders, then it might require you to go down to household data on financial shocks, on claims and expenditures. Now that's doable, of course, but it's a lot more resource intensive, and it's also potentially out of scope for regulators. So interpreting the results. So if data shows that each outcome along the chain of events happened, then in a way the research question is proven, right? But if not, with this mapping approach, we can actually see more clearly where the chain is broken. So for example, let's go back to this line. So you might see that, okay, new inclusive insurance products are operating the market. So that's check, yes. New inclusive insurance products are launched, again, check, yes. But you realize that there's maybe no or low uptake. So by mapping this out, it helps you to see more clearly that, hey, perhaps it's not the regulations that are at fault here, but perhaps it's a product quality issue. And if that's the case, then it might require a different set of targeted interventions compared to, let's say, sort of simply overhauling the existing regulations. So what we like about this approach is that it helps to avoid sort of jumping to conclusions and sort of provide a more nuanced view of, as was mentioned earlier, where exactly the chain is broken and what exactly needs to be fixed or what doesn't actually needs to be fixed. So this sums up my presentation on the methodology to the Brazil RA. And I'm very happy to pass it back to Rochelle and then to Regina, who will take you through the assessment. Thanks very much.
Thanks, Wei-Lin. I think that was a very clear explanation of the methodology behind the assessment. Again, everyone is welcome to submit questions in the chat and we'll address them at the end. Perhaps some things will be, perhaps Regina will give more enlightenment along the way to some of these aspects. So now it's my pleasure to introduce Regina Simoes, who in addition to being the regional coordinator for Latin America, she is the author of the paper. She's been with A2i since 2017. Previously, she worked at SUSEP, the Brazilian Insurance Authority, where she coordinated several working groups, including the Multilateral Group on Insurance Distribution by Retail Organizations and the SUSEP Microinsurance Working Group. So she participated in the development of the first set of microinsurance regulations in Brazil. So now we just need to get up her presentation. Welcome again, Regina. The floor is yours.
Thank you. Thanks, Rochelle. Good morning and good afternoon, everyone, and thank you very much for the opportunity to present to you today. Before starting, I'd like to acknowledge the SUSEP team and the members of the CNseg Inclusive Insurance Commission for the great support received, as well as those insurers who responded to the survey. My intention today is to provide you with some main findings from the regulatory impact assessments of inclusive insurance regulations in Brazil. I hope this encourages you to read the paper in full. Next slide, please. So the analysis periods ran from 2011 to 2021 on the basis that the main regulatory measures to support microinsurance and inclusive insurance were implemented between 2011 and 2013. Relevant market data is available along this period, which allows for monitoring of market development after the implementation of the regulatory measures, and new regulations came into force in 2021 with an impact on data from 2022 onwards. Next slide, please. This assessment took into account the regulatory measures in Brazil introduced by SUSEP and the National Private Insurance Council over 3 phases between 2011 and 2013. The first was a dedicated microinsurance regulatory framework, and soon after, 2 sets of regulations were also included on insurance tickets and the use of remote means in insurance operations. And this last set that regulations regulated new types of distribution channels, such as retailers. Next. So the next step was to define the lines to be considered as inclusive insurance within the scope of this assessment. So this list was defined through interviews with both SUSEP and the CNseg Inclusive Insurance Commission. So in addition to life and non-life microinsurance lines, we include other lines that provide coverage typically demanded by low-income segments, such as funeral and credit life. Note that only the lines in the first column could be sold by insurance representatives. The use of representatives as distribution channels required that insurance products were necessarily purchased through individual contracts, such as individual policies or insurance tickets. This will be important for some comparisons that we'll see later today in this presentation. Data was collected from SUSEP through its statistical data system with the support of SUSEP's team. Thank you very much for those who support me, and from the industry through a survey among insurers operating in the inclusive insurance lines, supported by the CNseg and Inclusive Insurance Commission. 8 insurers answered the survey, covering 21% of the microinsurance market share and 17.3% of the market share of the inclusive insurance lines selected for analysis. As not all data was available at the level of granularity required, we had additional meetings with SUSEP and bilateral meetings with insurers who volunteered to. To validate the survey, the Inclusive Insurance Commission held a workshop with its members. In addition, another meeting took place, this time with the SUSEP board and market representatives, in which supplementary information was provided. Next, please. As previously mentioned by Rolene, 2 hypotheses were considered. Regulatory measures increase the uptake of insurance among low-income and others underserved segments, and ensure that insurance of value to these segments. In the next slides, we'll see some of the main findings of the assessments at each output level of the logical framework and their regulatory impact. Of course, this is just a summary of its contents. So we start with the outcome level 1. Between 2011 and 2021, there was a significant increase in the number of insurers operating in inclusive insurance lines sold through insurance representatives. This is notably the case for individual funeral and individual credit lines and both life and non-life microinsurance. In the case of microinsurance line in 2013, only 1 insurer operated in non-life microinsurance and 2 in life microinsurance. By year-end 2021, we had 12 insurers in non-life microinsurance and 21 in life microinsurance. In total, the number of insurers operating inclusive insurance grew from 45 to 72. On the other hand, the number of providers of inclusive insurance lines whose sale was not allowed through representatives did not increase in the same proportion. It only increased from 77 to 80. Next, please. According to qualitative information, the regulations were decisive for defining inclusive insurance strategies, notably the regulations on remote means and insurance representatives. While the remote means regulation is considered key to reducing transaction costs and achieving affordable premiums, the regulation on representatives enable new distribution channels and partnerships along the insurance value chain. This made it possible to reach new consumer segments. The regulations together allow a number of new business models with innovative channels. Among them, we highlight the retailers. Actually, most respondents report product sales through insurance representatives, and among them, all use retail channels. Also, individual micro-entrepreneurs such as market vendors, hairdressers, and other individual service providing others individual service providers working in low-income communities and outlying areas using POS system for payment. These individual micro-entrepreneurs in Brazil are called MEI. Lottery shops and other types of bank correspondence, and online platforms and social networks, sometimes combined with in-person sales. There was also emphasis on direct sales to consumers through the insurer's own websites. Next, please. Well, moving to outcome level 2, Now, we can see that a range of new inclusive insurance products aimed at underserved risk segments were launched in post-2013. SUSEP reported that 116 new microinsurance products have been registered since the publication of the microinsurance regulation. 89 life microinsurance and 27 non-life microinsurance. In terms of product diversity, the industry survey provides some insights. So in the table, we can see different types of product lines. Note that these are provided by only 7 insurance companies. Together, they reported having at least 119 inclusive insurance products. The number of products per insurance then ranged from 5 to 31. The miscellaneous risk line saw the new types of cover, such as products covering assets generally used as work tools in low-income segments, such as handheld electric appliance or POS card machines. Next, please. The range of distribution channels allowed has been broadened under the regulations, and alternative distribution channels emerged, focusing on low-income segments. As insurance representatives, in addition to retailers, other alternative channels stand out, such as utility service providers, individual micro-entrepreneurs, and banking correspondents. In terms of numbers, there is no market-wide data available because it is the insurance companies themselves that individually register the representatives. However, the survey respondents report over 12,000 insurance representatives in June 2021, the number of which varied per company depending on their business models. A single insurer reported having more than 11,000 representatives. In the bilateral interview, it was clarified that these are generally individual micro-entrepreneurs. As I told you that in Brazil they are known as MEI. This means the door-to-door salesperson, market vendor, hairdressers, and other types of individual service providers. These MEIs are close to potential inclusive insurance consumers, as they often live and work in low-income communities. Note that there were more than 11 million individual micro-entrepreneurs in Brazil in 2021, representing 56% of companies. Other important distribution channels are banking correspondents, especially lottery shops. These are essential gateways financial service for financially underserved segments, especially the unbanked, this is the only access they had through financial service. Data from 2020 revealed that the existence of more than 210,000 bank correspondents in Brazil. Next, please. Now we come to the regulatory impact part. At the time of the assessment, SUSEP did not require reporting on the number of policyholders. So the only data available on the number of policyholders was that provided on a voluntary basis by the insurers who responded to the survey. But this data will only provide a partial view of the population covered by inclusive insurance at a given time by a given group of insurers. So premium data was used as a proxy for assessing if more low-income segments were accessing insurance. SUSEP data confirmed the substantial growth for inclusive insurance lines between 2011 and 2021. This is notable for product lines distributed through insurance representatives, which growth rates are higher than those that were not allowed to use these segments. Sorry, these channels, actually. In the table, you can see that in 2011, individual funeral and credit life lines have limited uptake, and microinsurance lines did not exist. Compared to 2021, these lines grew to hundreds of millions of reals. Next, please. In fact, the lines sold through representatives show the market acceleration growth rates in 2014 and 2015, just after regulations on insurance representatives and the retail channels came into effect, despite the economic crisis faced by Brazil from 2014. On the other hand, inclusive insurance lines, not sold by representatives, with increasing growth rates until 2013, showed a downward trend with some negative growth from 2014. Next slide, please. So, despite the lack of data on policyholders based on substantial premium growth over the periods, we can say that more low-income and unserved segments take up insurance, especially after regulation on insurance representatives and retail channels came into effect. It's important to note, however, that through the industry survey, 7 insurers reported over 12 million policyholders covered by inclusive insurance in 2021, which is a very relevant number. In terms of that of value for policyholders, data on the number of cases of non-compliance and misconduct related to inclusive insurance was not made available by either SUSEP or the industry. SUSEP clarified that although it has been collecting this data for many years, the calculation criteria have changed over time, making comparisons inappropriate. So only qualitative information was obtained through bilateral interviews. But the value could be assessed through 2 key performance indicators, the KPIs, loss ratio and commercial expense ratio. In general, the lower the loss ratio and the higher the expense ratio, the lower the value for policyholders. Next, please. So, these indicators show that inclusive insurance lines sold by representatives had lower loss ratios and higher commercial expense when compared with inclusive insurance lines not allowed to be sold by representatives, as well as with the Brazilian market average for personal and property lines. Although with an overall slightly upward trend at the end of the analysis periods, loss ratios of inclusive insurance line market through representative remain below 22% throughout the period, most of which did not exceed 11%. The only exception was the miscellaneous risk line. Loss ratios of inclusive insurance lines not sold by representatives are comparatively higher, hovering around 21 to 33% in 2021. For comparison, in 2021, average loss ratios for the main personal and property lines in Brazil, excluding automobile and larger risk lines, were around 40%, while the average for all insurance lines was 51%. Next, please. Regarding commercial expense, yes, thank you. Regarding commercial expense, although the data point to a downward trend in commercial expense at the end of the period, inclusive insurance lines sold by representatives exceed 4% throughout the periods, some of them 50%. In turn, commercial expense ratios for lines not sold by representatives were around 30% at the end of 2021. This is consistent with Brazilian market average for personal and property lines, around 32% for the main personal and property lines, and 25% for all lines of insurance. Next, please. Thus, loss and commercial expense ratios suggest that inclusive insurance business models in Brazil are currently providing lower value in comparison to traditional markets, particularly when it comes to those that use insurance representatives. The good news is that data from recent years show that this is gradually improving. Qualitative interviews also show that consumer protection provisions and market conduct requirements introduced by the regulations have helped to prevent malpractice. Next, please. Okay, so overall, we can conclude that inclusive insurance regulations introduced in 2011 and 2013 show the strongest positive impact in terms of bringing new inclusive insurance providers into the market, enabling new business models with a new range of alternative channels, and launching of new inclusive insurance products. In fact, new types of coverage have been introduced aiming at low-income segments. Regulations also brought important innovations such as the use of remote means in insurance transactions, and this actually simplify the insurance sales process, making it more agile and less costly, reaching consumer segments previously excluded or underserved. In terms of direct premiums, used as a proxy for assessing if more low-income people are accessing insurance, we can say that there was a substantial growth in inclusive insurance lines in the period, notably the lines market through insurance representative. The issue that needs to be improved concerns the value offered to policyholders. However, as SUSEP is actively improving its monitoring systems, this is also expected to advance in the coming years. Then, with this, we have reached the end, hoping that this presentation will inspire other regulators to promote their own regulatory impact assessment. Thank you. Questions?
Thank you very much, Regina, for this overview of the paper. I think it's a very good, detailed overview of the paper and the impacts that were discovered. Before we move on to the questions from participants, I would like to ask you a question first. Could you highlight what do you think would be the most important lesson here for supervisors who are interested in assessing the impact of their inclusive insurance regulations?
Yes, of course. I think, well, you need to read the paper to see all the lessons, but what I will say is I could maybe summarize in one word, that is data. Data is key. For instance, supervisors should think simultaneously about how to collect and monitor the related data when developing new regulations. Ideally, a new data collection framework should be put in place at the same time as the new regulation is implemented in order to monitor its effectiveness. But I think this is one of the lessons, but I would like to highlight just one more, that supervisors should value opportunities to work together with the industry. It could be through workshops, working groups, even during supervisory inspections. I think these occasions are the best way to promote dialogue and exchange of knowledge between stakeholders.
Thank you very much, Regina. Huilin, I'm not sure from your side, from the methodology side, maybe is there any lesson you would like to share for supervisors who are interested in conducting an impact assessment?
Thanks, Rochelle. There are a number, but I think for me, the most important one is to be very clear on what you want to measure. So, for example, even when you are sort of planning out the scope, like what insurance lines to include under the research question, do you want to include only products classified as microinsurance under the regulations, or should you include all-inclusive product lines that are outside the dedicated framework? So questions like that are really important, and you need to be kind of clear what you want to put on the impact pathway, and what goal it is, in order to give you like meaningful insights. Because yeah, I mean, I think experience has shown that there are lots of sort of regulatory measures that can contribute to inclusion, and if the scope is not clear, we can sort of get trapped in a rabbit hole that, you know, makes it quite difficult to quantify the results. So it's a bit abstract, but I think most of you who have gone through this sort of thought process probably understand what I mean.
Thank you very much, Weilin. Now we've had a couple of questions come in the chat, and a couple that were submitted previously. So we can look at Pedro's first question, which is, will the new registry system implemented by SUSEP collect official data on indicators such as the number of policyholders, beneficiaries, and number of representatives?
Well, I think SUSEP could answer this better than me, but yes, I know that maybe Jessica went to answer, but I know that SUSEP at the time of the study was implementing SROs, if I'm not mistaken, the name of this system register operation. Maybe Jessica went to answer this question. Please go ahead.
Yeah, but you are absolutely right, Regina. So the system is called SRO, and it will collect this data. It already collects for a certain type of insurances of products, and we expect that by the end of 2025, it will collect this data for all kinds of insurance in Brazil.
Thank you very much. And a second question, did market players that were interviewed provide any insights on the impact of the latest regulatory reform from 2021 that was not encompassed in the study?
Actually, yes. We can see a note, actually, like a chapter in the paper about this. They are very optimistic because the new regulation is a principle-based regulation, so they are free to draft the microinsurance products. So it's an evolution of the first set of regulations. So they, now that maybe a market know better, is more familiar with the concept of microinsurance, now they are free to design the way they want the new products. Of course, SUSEP need to monitor closely this new products, and I know they do this. And so, but yes, they are very optimistic. Thank you for the question.
Another question from Shelley. Based on your research experience, do these results compare well to other countries with inclusive insurance frameworks, or is the Brazil case unique?
I would say that each country is unique because each country that have their own characteristics. So I've seen the others regulatory impact assessments. They are completely different. The regulations, the way they apply it, maybe Peru is more familiar, but yeah, I think it's different. The size of the market, and I think it's something that need to be taken into account. It's very important to understand what to learn about experience in other jurisdictions, but each country that need to find their own way to regulate, because each country is unique. That's but of course there are lessons that could be taken into account.
Thank you, Regina. A question came in from Matthias. Do you have an overview in percent of new representatives that entered the market? It would be interesting to see what kind of companies entered the market, such as MNOs or foreign insurance providers who are using microinsurance as a market entry strategy.
Well, in percentage, no, because it's as I told you, only 7 insurers report having over 20,000 to 12,000 insurance representatives. So it depends on business model adopted for each company and in the focus of each company. So in Brazil, there are companies that focus on specifically on low-income people and that sold insurance directly to policyholders, that consumers. So their focus are funerals, for instance. We have a microinsurance that their focus are funeral insurance and other related service like life insurance, and they have a close relationship with policyholders, but others are more focused on the kind of target they could achieve through retailers, for instance. So it's completely different strategy used. They use maybe 2 big retailers to distribute insurance, but others like one of them, a group that is linked for a big bank, a big retail bank. Their main focus are, for instance, the individual micro entrepreneurs. So they have thousands of representatives. So even SUSEP, they don't have this number because it's very particular. It's something that each company has their own control. So it's like depending on the business models. It's completely different from company to company.
From
And
Maria Augusta, congratulations on the presentations. I wonder if the survey has been able to capture whether the more flexible microinsurance regulation has helped to implement microinsurance products.
well, it's if this why is it to plan to sell? Okay.
No, the question before that.
Oh, sorry, because I was not.
If the
So
survey has captured whether the more flexible microinsurance regulation has helped with the implementation of microinsurance products.
yes, of course. I think in the case of Brazil, there are 2 points to take into account. Well, I think in every jurisdiction you talk about, in every jurisdiction, what is key is the distribution channels. And I think everything changed since the regulations on insurance representatives. That means flexible, that gives flexibility for distribution channels, change the market as a whole, not only for microinsurance but all inclusive insurance lines. And yes, so they helped a lot to implement microinsurance products. I think it was key because we can see in the graphics the difference once the inclusive insurance, when the regulation on insurance representatives was issued. It's like even at that time, Brazil was facing a very deep economic crisis. But when this regulation was issued, it was amazing how this product was like it's like a demand that was not being attended. So you can see it perfectly in the graphs. I don't know if I answered the question. I hope so.
Thank you, Regina. Now from Nicolas Morales, congratulations for this insightful study. Is the A2i planning to extend this assessment tool to other countries? And second, as part of the assessment process in Brazil, were any barriers or new needs identified?
Yes, I would like to give the word to Matthias to answer the first part of the question as the new chair, the new head of A2ii. But the second one, I could say that yes, the barriers and needs are identified in the paper. I think the barriers are relates to the data on policyholders. I think it's very important to to use this data now that SUSEP is developing. The needs identified, I think it's more clear now, some kind of needs of consumers. Also, I think that the channels maybe to achieve this new consumers are showing a lot of specific needs of these segments that could be more now meet. Matthias, could you answer this first part of the question, please?
I think that he had to step out for another call.
Yeah.
But I think certainly it would be wonderful to do more assessments. Perhaps if there's any countries particularly interested, they can reach out to us and we can talk about it. Of course, our email address is secretariat@a2i.org.
Yes, I think the idea is to Nicholas. Thank you for the question. I think the idea is to keep going with this kind of study because I think it's very useful for countries and also for other supervisors.
Yes, it would be great to see more impacts like this, more impact studies. Of course, it's a long process to start and get to publication, but very worthwhile. Are there any other questions? If someone would like to raise their hand or to type in the chat. We do have one question that had come in before, which is, why did the regulation require that insurance products sold by insurance representatives be purchased through individual contracts?
This was because of before the regulations, there were a lot of abuse relating to consumers. So at the beginning of the process, before legislations, retailers proved to be an extremely profitable channel, and they became one of the main insurance distribution channels for low-income segments. So as holders of the client portfolio, the retailers enter into contracts with insurers defining their own remuneration. So, however, they were not allowed to market insurance. Retailers assume the role of master holders in group policies, selling insurance coverage bundle with non-insurance products. This led to consumer protection issues such as clandestine sales when consumer is unaware of the purchase of insurance. In addition, the low loss ratios, close to zero for some lines, were a strong indicator of the inadequacy of the products. Also, there were numerous complaints, consumer protection agents, and demands on the public prosecutor's office. And that's why, despite of this situation, as a regulated entity, SUSEP could not do little against retailers. According to the Brazilian Civil Code, as master policyholders, in the event of any irregularities committed by retailers, it would be up to policyholders to take legal action against their legal representatives. So that's why regulations prohibit the use of group policy and sales through insurance representatives.
Thank you very much, Regina, and for the participants for the questions. Are there any more questions? Okay, I think for the moment, we've covered all of the questions, and we're also coming toward the end of our time. So I would like to thank again both Huilin Chu and Regina Simoes for your presentations today. Very insightful, and we hope that the lessons shared can support new actions for the development of inclusive insurance markets and inspire inclusive insurance supervisors in other jurisdictions. We do have one last request before we close the session. You will see a poll appear on your screen. It is anonymous, but we appreciate your answers because this helps us improve our future events. Thank you once again to our other speakers, Matthias Range, Connor Donaldson, Luciana de Angel, Jessica Bastos, and again to Huilin Chu and Regina for the presentations today. And also thank you to everyone who participated and dialed in. It's been a pleasure to see everyone today, and we look forward to seeing you in our next A2i dialogue. Thank you and have a nice rest of the day.